Hey, this is Matt with PriceActionTradingSystem.com, and it's Thursday. It's October the 2nd. This will be our chart lesson for today, and another really good trading day. It was all downhill early, and then it reversed on a dime, and it's been all uphill really for the most of the afternoon until just before, maybe just around 2 o'clock or so, and then we had a little correction, but I would expect a retest of that high and maybe even a new high for the day. We'll see. It may just turn out to be kind of a range type deal in the end. Um, you can see this area here, this 1941 area. It's been an important area. It was actually the open today. It was the close yesterday, and then the open today, and you can see it was kind of an important area there yesterday. It was kind of the swing point for the late afternoon stuff. So um, it's obviously an important area. It acted as support early in the overnight trading, and then into the open it acted as resistance. So this was more range-like at this point. I don't have a blue line up here because the yellow line's there, and it makes it easy to see the highs right there. But your clue, make sure you get this. But the clue that we may go lower here is Notice we broke higher. We failed out the top. We trade down. We come up. We make a lower high. Doesn't get back up there. We go a little bit lower, and then we make another lower high. So when you start to see that, that means that the buyers are losing momentum, and the sellers are gaining momentum. So either way, it means that the selling's picking up versus the buying. And you can see this little breakout pullback short, and then boom, off it goes. And that was just like a waterfall. And then it finally reaches its low, it reverses, and we've been headed up really for the rest of the day from just before the 11 o'clock hour, my time, Central Standard Time. I mean, we took it all back in no time at all, um, and then some. So really interesting day. Um, I see a two-tiered channel. I originally had the low of the channel here and what looked like a midline in there, but once we kept going lower, you have to assume that there's something else going on, that there's a midpoint and a measured move, and you can see that that's pretty much what we got. Um, there's a little bit of a close outside here, and you could have drawn this differently. Um, but it's no doubt this trend line is, it's drawing it right off the top, right through those first closes, and that's right where we turn the next two times. So you can't argue with that trend line. You would think that we'd probably get another move down, but it could be that maybe I had it right earlier, and the midline is in there, and the lows are. That's the way I originally had it, and you still can't argue with that. It still looks pretty good. Um, so there's definitely something going on down through there. So maybe this is right, and we just had the big overshoot. And a lot of times when you get an overshoot like that, you don't get a retest. That's the one time you don't get a retest, when you get a big overshoot, because the market just gets too overdone, and it reverses, and then the momentum switches, and it can't ever come back again. So maybe this is still right. Actually, I still like the way that looks, but I had moved it when we kept going lower, and I played with this a little bit and assumed that maybe this was the midline right through here, and then found a measured move, and that's exactly where we bounced. So it's really doesn't matter at this point. If you drew your shorter term ones, it kept you on the right path, and there's a short term little channel here and a break and a move. But guess what? It didn't turn right here. It just went up, came back, tested it, which is kind of what you expect, and then turns and goes higher. And so just a really good trading day. I didn't mark anything much after lunchtime. I mean, there were so many trades here, and there probably wasn't another setup till almost 1 o'clock here after these last couple right here. So, and understand too, I want to discuss this. There's definitely trades to the upside all the way up here. I didn't mark them. There's a trap right here. Let's just go ahead and move it over. There's a failed second entry short right there. So let's go ahead and make that one green. I'm going to make them green because they're definitely counter trend trades on what looked like a really big down day. And then there's another bounce right there off of that trend, the trend line working up through there. And it was easy to get the trend line off the upper side and just drag it down. And so we bounced again there. So maybe that one, you know, if you're still trading, you probably are interested in that trade. And then it comes back and tests it again and then still goes higher yet. So there's some different things going on there. Trades that you would probably be interested in. And there's really even a short here that you might be interested in. It's not a great setup, but it's right off that trend channel. And and there's not a lot of room in there for second entries. It went from one side to the next. So there's even a trade right there. And there's actually, this was the other one that was really, you know, you kind of contemplate over right there. I'll go ahead and mark it green too, just because there's probably some people that saw them that'll wonder about them. And rather than just not even marking them, I'll go ahead and at least make them green, and we'll talk about them when we get there. So let's back out, make it a little bit bigger. When I came in, we were trending up. We had a break right here. Notice the new high, pullback first entry, pullback second entry. It's the first real close outside. So you know you're going to try to push higher to test that high, those highs right there. So I liked going long right there. I did like using a limit order here, and it would have gotten filled at least a tick back in here, maybe even an extra one. I can't remember if it ticked further back. I mean, you can't be too conservative or you'll miss the trade. So in my case, I usually try to get in where the closing was, which was right there. So I can't remember if it ticked back enough to fill this next tick or not. Maybe it did, but I can't remember. So you can't be too conservative. But quick, easy trade. Then it pulls back. Gives you a second entry long, counting off the low, a failed break lower. It went out the bottom first, turns and goes up out the top side. A couple different reasons to go long there if you like. But the reason I marked it green is it's so close to those highs. But it's like a breakout pullback long, really. And you did try to go lower. You tried to go lower here, and then once, twice more, and it's not even getting all the way back to the EMA, and it's going higher. So it's still kind of strong right there. So when you got just enough there might have been a tick to spare here. This is one where when it broke higher, you might have thought about, again, trying to limit order right at the top, maybe a tick back, or you probably just skip this trade because it's so close to that little double top, and there's been resistance across here. So there's reasons to be leery of that trade. There's a short coming down here, but I think you're better off to wait on the second entry, and then it ends as a doji right there. And there is that line across there that's been acting as support and resistance, and prices hadn't closed under it yet. So just kind of wait, and then it goes down. I don't know if you want to go short right here either. There is a trap right there, but I didn't like going short right there either. I think it would have worked. Let's just look and see. Broke lower, it would have been 38.50, and it had just enough. So, you know, that's another one. It probably should be green because it is a trap, and it does. But you didn't come back and test this area. That was the, you know, there's some couple different reasons why I'm not crazy about it. But it does fit our criteria. I think it's a little bit, and it is a trap. I think it's a little bit of an aggressive one. But I'll mark it in green too. But then you come back and you test that and you break higher and turn and go down. Look how bearish that is. I like that one for sure. And then you figure we're probably going to test this low. But again, it goes, I mean, this turned out to be a really good trade. And of course, you don't know that. You're just looking for a scalp, and you got plenty of room to get out between here and definitely room to get out before here. So, and then it comes down here, it bounces, and you know, this was really bearish, but you notice you got two legs down there, and they're almost measured legs, So look for a possible reversal. And this is looking a little rangy already. We opened right in here, and but I didn't. I don't think you can go long right there because um, the EMA is just right there. There's a good chance it hits that and turns down with a second entry short, but it goes on through and then turns down. You don't want to go short below that. Um, so just sit tight, see what happens, and it breaks lower and fails, and you get a failed second entry short, and then you get a chance to go long in what looks like kind of a range, rangy looking. Look at the EMA. It's just up and down, and prices are swinging on both sides, and we're just headed back to the upper side. And then it pulls down. You get the break here. There is a second entry long here. I don't like that one. It pulls back and then it tries to go higher again, but again, you don't have any decent signal bar here. This is not a bad signal bar if this was the first bar going up, but look, you got to get long right into that, so you're better off to wait. And you might have even thought about going short on that first one. Again, it's one of those that's just right there. We didn't quite make a new high. We had the break. But there's reasons to like that. I mean, look how bearish that is. So really, I'm circling this whole thing right here. You could have gone short right there. It's a little more aggressive, but when it ticks higher again, and you don't want to go long right there for sure, and then turns down because this is acting as support. As resistance all the way across there. Now you've done tested it 3 times, and you don't want to go long right there. But when it turns back down and goes out, just go with it. And then guess where it bounced? And now you got a couple of legs down, and guess where it bounces? Look at that reversal bar right off those same lows. That's what a reversal bar looks like. It opens, trades way down here, and by the time it closes on its very high, and it opened there, and it had to tick back. So that's one where you could just use a stop, but a lot of times if that gap's there long enough for me to get a limit order in, I will drop a limit order right there, hoping it will pull back. Okay, I apologize. Somebody's always calling, trying to get me to invest with them or to send them some money. It's the only thing about being in this business. Once your name gets out there, you'll get 5 million calls a day from brokers and everybody else. But anyway, nice long right there, quick, easy move. And it really goes on through there. It looked like we'd probably go on higher to the upper side, but no, it doesn't. It just keeps working lower. And there's no real setup there. You don't get any traps or anything. That's a really bearish bar. So you might have waited on a break there and tried to use a limit order, but I just think it's too risky. I think you need some kind of trap or break higher before it goes. And you never get that till here. And then you're right here again. So just not a very good chance to get short right there. But that's what I'm saying. Just, and a lot of people, that would just tear them up to sit there and watch that go lower without them. But that's what you got to learn to do, is just be patient, because you don't want to get trapped on the wrong side, and you don't want to enter on trades that normally won't do this. Normally, if you start to get all that overlap, it'll break out. And it did. There's a little bit of overlap there. It breaks out, it pulls back, and then goes lower. But by the time you get a chance to get in it, it's way down here. And a lot of people wouldn't even see that. But if you know what to look for, notice all the overlap right across there. 1, 2, 3. And they're really inside this 4th bar. And it breaks lower. And then it pulls back up and tests it, and then goes back down again. But it's just real. You can tell that it was just really indecisive. Nobody knew what to do there. And that's obvious by all the dojis and the stems, but obviously the sellers were in control because it continues to go lower. But guess where it bounces there? But again, that's the first break of that bar, so you're probably going to get a retest. And when it turns down right off that trend line again, it makes that lower high. And it broke higher first. I would have liked it better if it would have went on out the other side. I would have used the stop. But in this case, it broke lower and backed up. And I know you could have gotten filled on this one 2 ticks back, because I did. And it just takes on off down. Nice, easy, quick trade. And then, of course, it's bouncing right here. And if you're not paying attention, you don't realize there's support across there by drawing your line. You probably, you're thinking, let's go short here. And, why is it getting hung up? But notice that little double bottom. and it tries to go lower one more time, and it breaks lower. And I guarantee you people got trapped short right there, because that's what that is, a short trap. People that, I mean, there's umpteen number of traders that tell you to go short on breakouts like that, where 9 times out of 10, if you fade it, you'll get a quick, easy scalp. So we don't go short there. We wait on the break, and then look at that reversal bar. It traded way down here, reverses, closes on its high, just like it did right here. It's kind of a similar pattern: a leg down, a breakout, and a move down, a leg down, a breakout, and a move down. It's not exactly the same, but it's close enough. And we know that prices have bounced here umpteen times now, so just go long right there. And guess what? It turns down again right off that line. But nice long right there. And all you're looking for is a scalp right there. And you can see how the EMA is flat and prices are on both sides. But the clue to be real careful and think that maybe we're going lower is look how the highs. Every time we broke higher, it made a lower high. So the buyers are losing momentum. And we actually got a little lower here than here, a little lower here than here, and a little lower here than here. But it's still a failed breakout that reverses. And every one of them is moved pretty good back to the upside. You can see that. This one, boom. This one, boom, boom, boom. And that really, you should have had that line by then. You really should have had it after the first two swings and that touch right there, but definitely by now. And I like this one for a short. Again, you might have used the limit order, and you could have gotten filled a tick or so back into that bar. And just to make sure you got enough room to get out before you get to here, but this thing just keeps on going. Another one of those turn out to be a nice trade. It pulls back here. This is the first entry. It's a little aggressive because you've had a really big move down. You're not quite back to the EMA, but that's because there's a little trend line working down through here, and prices just can't get through it. So you might consider going short there, but again, it's not a very good signal bar. So see what this one does. When this one closed lower, you might have put a stop, but you still got enough room, but you never know. This is really your signal bar, so you just about have to wait on the break there and use the limit order, or I don't think I would use a stop there because it's not a very good signal bar. It's a first entry. We've had a big move down. We're not back to the EMA. There's some different reasons, but too, it's kind of like a breakout pullback short because look, there's a little double bottom here. Look at that bar. Look at those closes. It breaks through, comes back. So there's another reason to take it too, because it's a breakout pullback short. So a lot of aggressive people are probably going to take that trade, and it does fit our criteria to some degree. It's just not the optimal trade. But notice we move on down, pull back, first entry short, pull back, and then it breaks lower right here. Second entry short. Again, you might have used the limit order. It would have got filled a tick or so back into that bar again, and it just takes on off. And I don't think you can risk any of these. And then you get, because the bounce is coming, and then there it comes, and you get that little trap. Notice that pull back first entry, pull back second entry. It fails. There's a little bit of congestion. It fails out the top, turns and goes down. I like that one. Quick, easy short. And then you get a second entry short right there. Again, it's really a second entry counting from the highs. Actually, the second entry triggered right there, so I take that back. I didn't notice that. But on a bigger picture, it's still going to be a second entry short counting off that high, but it doesn't matter. What I like about it is there's a new low right there. Pull back first entry short, pull back second entry. Look at it turn down off the EMA. There's a trend line right down through there as well. That's a nice second entry short. And again, it takes on off. You don't know that. And then you get a failed second entry long right here because this is your new high. Pull back first entry, pull back second entry. So now you got a failed second entry long there, and it turns down right off that trend line. Look at that big bearish bar. I actually liked going short. Let me move this below the green bar here because it is a trap, and because now you're figuring it's going to go even further. But if you wanted to, even that bar, I don't have a problem going short right there. And that is going short at the low of the day. But this thing's moving. And look at this leg here. You got to be thinking when you started lower there, you got to be thinking, hey, there's going to be a measured leg of some kind. So that puts prices all the way down to here. And we actually went a little further than that. So that's your target area down in here if it keeps going lower. So, and again, this is just a first entry short. There's a little bit of congestion, but notice how there's a little matching double bar matching highs right there, and it breaks higher and turns down. And that's a little bitty bar that you can get in. So I like that just to risk it for a short, just because you got maybe a 2-tick stop. And there's a good chance it's going to get that measured move, which is way down here, and it is right off the trend line. But it's a first entry, and it's a little bit congested looking there. But if you understand what's going on, I liked it looking for prices to come down here. I think the measured move was right into here somewhere. Plenty of room for that. So I liked it as a little more aggressive trade, looking for something like that. And then we do bounce. There's a failed second entry short here. Notice the new low, pull back first entry, pull back second entry. And that is a nice bearish bar right there. Coming off of, right off of the EMA. I'm not sure if it actually, the entry would have been 21.75. And it went to 21.50. So, there's a second entry short right there as well. I'm gonna mark it too. I think it's aggressive though, because we look how far we've moved, and we've overshot the measured move, and we moved up, and we didn't really get any resistance there at the EMA. It went higher and then pulled back. I just didn't like entering there. I didn't even think it got enough, but it did get enough for a second entry short. And it has been all downhill, but there's reasons to be leery about going short there. So I wouldn't have taken it, to be honest, but I'll go ahead and mark it green. But when it went longer there, I liked it to the long side. But again, it's aggressive because it's a counter trend trade. But there's a trap. I just think anything to the long side back up through here, even though you don't want to be going short, you got to be real careful about going long. Um, we're waiting for prices. Once we went through this area right here, you're waiting for prices to get here um, before you start looking for shorts. And it went right on through there. So then you got to be real careful. And you can see a lot of people were jumping on, and there's probably enough for a scalp, but then anybody that hung on longer than that got burned. This was the first one I really liked, clear to the upside right here, and that's only because there is a trap right there. It's a second entry long, and it's a failed second entry short, and this is a nice reversal bar. It opened here, traded all the way down here, and then reversed and traded all the way back up and closed on its very high, and then the next bar opened on it above that. So it takes a lot of buying pressure to do that. And plus you've got this channel working up, and you figure there's going to be a retest anyway, and we were looking for prices to come back up here. And so I like that one. Again, it probably should be green because it's a counter trend trade. I'm going to make it green because it's just right there border, and we just talked about all the reasons why you got to be careful buying down here. But it just keeps on going. And now you know that something else is happening and going on because it went right through here. And this is a new low here. First entry short, pull back second entry short, right where everybody's thinking to get short up in here. And then it reverses and goes. So I liked it for a long, and then it tries to go short low one more time. Look at this little double bottom. You could count that as a new low. First entry short, pull back second entry short, and look how bearish that bar is right there. That's going to trap a lot of people when it broke below that. Take that to the long side. And you definitely don't want to be getting short up in here. Not with the trend line working right up through there. Not with the fact that you've got this first leg, and again, you got to be thinking about your legs. There's your first leg, and then your correction. So measured move puts it way back up here to this line here, which was the close from yesterday. And so you're looking for prices to come up here at least. A lot of times you really can use those closes right there, and if you use those closes, you can see people were starting to exit right in there, but it continued to go higher. So, and I didn't mark anything after that. I mean, really, all your trading was down through here. I mean, it was easy to be done early today. We'll back out so we can see the big picture one more time. You can see this is a nice sell-off, but this thing is reversed. Is the sell-off done for now? I mean, we were at 2,000 not long ago, and we're almost back to 1,900 again now. So it's been a really fast and furious move down, and I'm assuming people perceived that these 2 days in a row to the downside were probably a little overdone. So profit taking, some people looking for good buy in the market, things like that will cause it to reverse like that. And, but anyway, that's pretty much it for today. Not much else you can say. We got, it took 30 minutes just to go through all those trades. So it was a lot of trades today, a lot of good setups. And, and when you look and see all the good setups, it really helps you understand why. Just skip the green ones. You don't need them. Of course, if you catch some of those, you get some really good runners. So, but you shouldn't be probably trading with runners yet if you're not, consistently getting it right, getting the direction right yet. If you're still, if your win percentage is still under 75%, don't use runners. Just scalp out in full and work on just getting the trades right, and don't have to worry about whether you get the runners right or. The big problem with that is that if you're just trading, especially if you're trading, say 2 contracts and you don't get many runners right, so every winter you only, get one winning contract, and then it backs up and gets your runner on the second one. So you're only getting 1 contract on your winner, but every time you get stopped out, you're losing 2 contracts. Well, you just can't survive like that. So that's why I've come to the conclusion that as you're first going live and you're just trading to try to, you've proven you can do it on the sim, so now you want to go live. You still there's still going to be some, what's the word I'm looking for? There's still going to be some there's still going to be a transition period between that sim and live where you got to get your nerves right and all. So you want to just start out, even when you go live after you've proven you can do it on the sim, just start out scalping singles. And that'll be easier for you, and there's a less opportunity for mistake, and you definitely, it eliminates the problem of only having 1 winner on your scalps and then 2 losers with more than a scalp and that kind of thing. It eliminates a lot of those issues as you're just getting started and learning. So hopefully that makes sense to you. But any questions on that, drop me a note. But I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.